The economic condition of the UAE is strongly on the mend. This was the message passed by His Excellency Hamad Buamim, Director General of the Dubai Chamber of Commerce and Industry, speaking today at the second economic seminar of the year, held at the Chamber premises. Mr. Buamim opened the seminar and stated that the post-global financial crisis era is expected to bring about fundamental and structural changes which will lead to the creation of a new business environment and private consumption in the UAE. The Director General went on to say that for the first time in many years, the non-oil sector's contribution to GDP rose to 71% in 2009, a clear indicator underlining the country's resilience and ability to recover from the economic challenge.
As you are aware, the economic condition of the United Arab Emirates is strongly recovering, with the country focusing start to shift more closer to the trade, to the logistics and supply chain, to the financial services and tourism. And this is very important change which played a greater role in softening the impact of the global crisis of the economy of the United Arab Emirates and of Dubai.
Mr. Buamim was followed by Dr. Asa Abdul-Galil, whose presentation on Dubai's economic growth scenarios for 2010 highlighted the economic sectors that have had positive economic contribution to Dubai's total GDP before, amid and post the economic crisis. These included manufacturing, utilities, transport, finance, social and government services. His presentation further revealed that all business sectors are expected to contribute positively to the economic growth except for construction, real estate, mining and domestic services.
Economic sector like transport, manufacturing and government services and trade, those are the major sectors which are going to lead the economic recovery post the crisis. And the expectation for the GDP growth is going to be positive. There are many sources which expected that, like the IMF, they are expecting 1.3. Today actually Citigroup is expected like 1.6. And if you look at the positive growth before the crisis, which was 12%, definitely for 2010 the expectation is positive growth.
The second presentation was given by Mr. Fahd Shah on the trade and investment opportunities for UAE business in COMESA countries. He noted that growth in the common market for Eastern and Southern African countries is fueled by consumer goods, and also highlighted opportunities in other sectors such as agriculture, minerals and energy, infrastructure and trade and tourism. The final presentation was given by Mr. Ehsan Koman on the dynamics of consumption in the UAE. He gave a detailed account and examination of the UAE's private consumption and demographics in light of the increased government spending in 2009. He also noted continued government support for infrastructure and transport projects, which is expected to translate into higher aggregate demand. An open Q&A session followed, and the event concluded with a further opportunity for attendees to network and discuss the panel's presentations on a one-to-one basis.
Well, I've personally been in the region a long time, more than a couple of decades, and the group I represent, the Belhassa Group, obviously is a well-established part of the local business community. So we're taking the long view. Our view is that there's been a lot of negative comment about the so-called economic collapse, which of course Dubai has suffered as much as anybody else. But we're taking the long view that we're expecting to bounce back, that the long-term investment of the government is going to carry us through this, and we're expecting to find the old Dubai coming back stronger and better, trade and growth in all the other areas which we were historically in.